I'm going to show you how to perfect your entry just like this and how to find this particular setup. By the end of this video, my goal is to prepare you to be able to find this setup yourself, know the thesis behind it and why it works, what to actually look for, how to scan for it, and then once you find it, how to actually enter the stock and where to take profits in a very specific way so that way you can actually do this on your own after watching this video. The first thing you need to understand is the whole idea of the setup. What you're looking for is to trade the reversal. So you're looking for a stock that's running up or coming down, and then you're looking to trade the reversal in. So if it's a stock that's going consistently down, you're looking to catch the first time it runs up and starts to really rocket. The same thing on the reversal in. If you're seeing a stock going straight up and it cracks, you're looking to ride it all the way down. The challenge with this setup is some people will see this or just hear this part, click out of the video, and then go take a lot of losses because this setup sounds easy to find, and it is. But there are a lot of setups that look similar and they are not the same. And if you try to take this strategy and implement it, you're going to take tons of losses. So I need you to pay very close attention. But don't you worry, we're going to provide an overview of this entire trade, what to look for in print format. All you have to do is click the link below, send us your email, and we'll send that directly to you. So that way you can download this and use it as homework. Put it at your computer, so when you're trading, you can just look at it to reference. And if you want, you can download that right now, so that way you can use that while I'm going over step by step right now during this video, and you could take notes on the paper itself. So let's get started. So what we're looking for is a stock that is moving like this, something that's just moving up consistently and hasn't really had a major break in trend, because this is trending. What is trending? It means when we have a higher high, a higher low from this one, a higher high from this one, a higher low from this one, a higher high, higher low, higher high, and you get the picture, right? That is what we're looking for. Same thing in the reversal in, right? We are looking for the same thing. We're looking for a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. It's very simple in terms of what you're looking for to begin with. Now, just because you find that doesn't mean you found the trade, because then the next step is you want to draw a trend line. Now, the reason I draw a trend line is mostly just for visual purposes. You can see it, but just why not draw it? It makes it easier, so that's why I do it. Now, once you draw it, the next thing you want to do is make sure you find a previous area of support. If there's a previous support area near the trend line, especially if it's on it just like this, then it makes the strategy even better. But it could make it even worse if you try to anticipate. So what you don't want to do is try to short it. In this case, you want to take the reversal, right? We want to try to catch this move. That's what we're looking for. What you don't want to do is try to take your entry right here because you think it's going to break. If you do that, then what's going to happen more times than not is it's going to continue up. And the reason it does that is because it's trending. You always hear the trend is your friend, and it is in a specific type of trade. However, in this setup, you do not want to anticipate. If you anticipate, then you're going to find yourself frustrated and you're going to run into this type of problem. So instead, if you see a support level near a trend line, you just want to avoid it until after it breaks. Don't enter right after it breaks, but wait for it to break. You gotta let it break. And it's okay if it goes without you. It's gonna happen sometimes. But let me promise you this, there's a lot of times that it's gonna do this. It's gonna break and then come back and then go. So that is what you're looking for. That is what you want. If that happens, oh, it's a sweet spot. If this trend line doesn't have a support area, let's just say it bounces here and goes really high, then comes here, then goes here, and we extend this trend. If this happens, and let's just say it continues, and then comes back down, and we don't know if it's going to break or not, but we have a wide gap between the support. Unlike this area, we had support right next to each other. This is a different type of setup. In this case, if this breaks, the odds are going to be more in your favor that it's not going to hold any support level because there is no support. You see, the previous resistance is way up here. The next support is right here. So there is a slightly better chance that you can take this entry, but I highly recommend you avoid it and you wait for it to pop back up, just like I explained earlier. If there is a previous support in this area, then you do not. It is a huge red flag. Please avoid it until it cracks. That is all I'm trying to say here. I just want you to be very clear. You need it to crack. That is the main criteria. If it does not crack, do not take the trade. Now, let's go ahead and go into the details of once it cracks, how you should trade it. So let's say this stock is trending and then we finally get the crack. And let's say it cracks very nicely like this drawing here, which can happen, and it does happen often as well. But what happens after that is we get a bounce. Now, where do you enter? Now, you're probably asking that question. What I like to do is use the previous high. So that would be this area. So in this case, you want it to pop as close as possible to this level. The closer it gets, the better, because then you have a better risk reward. You don't want to get in down here, because if you get in down here, then it's a wide area of risk, and then you only have so much reward. How you determine what's a good risk reward is I look at the previous support level, which is right in this area. If this distance between here and this distance between here, if you enter right here, if these distances is 2 to 1 minimum, then I'm going to take the trade. If it's 3 to 1, I'm definitely taking the trade. That is my criteria. I do not want to take the trade just because it cracks and it pops up to this area if it's equal 1 to 1. That's just not worth the risk to me. So you have to be specific. So not only am I looking for something that's trending, that's consistently trending to the upside or the downside. Remember, you could flip this upside down and do the exact same trade for the reversal and buying a stock that's been consistently going down, or shorting a stock that's been consistently trending up. Just because you see that, the next step, you got to see the crack, then you got to see it bounce back up to a prior level of resistance. This is obviously illustration, so it's like picture perfect. There could be instances where it looks like this. And if this happens and you see it about to crack, well, in this case, you don't have to, you're going to be questioning yourself, should I risk here or should I risk here? This is where trading is not black and white. This is where your experience will come in. If you trade small caps, if you trade big caps, if you trade Forex, if you trade crypto, the strategy will work in all markets. However, I don't know your specific market. And in my market, when I trade mostly big caps, I trade small caps as well. If I'm trading a small cap, I may use the higher level because small caps, low floats, they're very easily manipulated. But if I'm trading a big cap, I may use this level. But there are some cases where if I'm trading Tesla, I'm using this higher level because Tesla acts like a small cap the way it reacts to moves. It also depends on how it acts whenever it cracks. If it just cracks and goes straight down strong, well, I expect a very equal response to the upside, so I may use a wider level. If it cracks small like this, then I may use this prior level because how it's reacting, how the stock is moving, how it's reacting to levels is something you need to pay attention to. So you have to practice this. You can practice this with a demo account, which I highly recommend, especially if you're watching videos like this because you're trying to learn. Open a demo account with TradingView or Cobra Trading. TradingView is a software I use every single day to scan for my stocks and to actually look at the market. I'm going to show you just a second how I actually scan for these stocks with TradingView. But if you're interested in TradingView, there's a link below. If you click that link, it does help me out a little bit, but it helps you out a ton as well. We both get a great deal, and it's a great software, and I highly recommend them. Cobra Trading also offers a demo account, so definitely check them out as well. I love Cobra Trading because they're a direct access broker, and you can immediately execute trades very fast. And it's very, very realistic. You know, it's up to you which route you take, but I just want you to know I use both. So here's how I scan for these setups. I want you to take a snapshot of this, press pause, look at this. You can tweak it however you want. This is my sweet spot. This is how I find these stocks. I'm looking for stocks that are more active than normal. And I'm using the scan every single day to find these stocks. The most important section in my scanner is the average true range. This is so important to me because I want it to at least be 1.5. So that way it shows me it's moving a little bit above average. That is what I want to see. Everything else, you can be however picky you want. You can play with this. I actually tweak this often when I'm trading pre-market, when I'm trading after hours. Maybe the market has changed and things are not as active. I may lower the pre-market volume. I may increase it. There's times where the market is super active and every morning everything's trading millions and millions of shares pre-market. I'm not going to scan and look for 30, 40, 60 stocks. I want to have my list populate under 20 stocks. So if your list is populating 20 plus, you may want to tweak this and lower or change the settings where you get 20 or less. That's my goal here. The reason I want that is because I want to spend enough time to look at these stocks and disqualify the ones that I don't want to trade and qualify the ones that I do. Now, the time frames I use every single day, I use the daily, the 4 hour, the 1 hour, the 30, the 15, the 5, and the 1. I know that sounds like a lot, but my main priority is the daily, the hourly, the 15, and the 5. Those are my main focus. Now, there's no magic in those, but I have found that they're easier to see these type of setups when I use those time frames. That is just what I have found. When I use the 1 minute, for me, I find a lot of them, but there are a lot of weaker ones that don't really work. So be careful. The 5 minute work mostly, but there are a lot of cases where it does not as well. The 15 minute is the sweet spot for me and above. If you could find this on the hourly, the 4 hour, it's even stronger in my opinion. That is something I use every single day, and I need you to know that. After we do our scan, the first thing I'm going to do is look at the daily. So what we're going to do is look at Apple here as an example. This is a trade I actually took. I'm going to show you this trade really quickly. You can see it here, and I'm going to go into detail in just a second of what I did and why I did that. I want you to see that how I draw my lines. And the first thing I do is I look for things that stand out. This line obviously stands out here. We have multiple touches, which is very, very important. I want to see 2 to 3 touches minimum. The goal is really 3. It's some cases I like it when it's 2. If it's like major reactions, very strong volume behind it. But for most cases, 3 touches is the sweet spot. If it doesn't have 3, especially if you're new, you want to avoid. And then I zoom in here in the hourly and just look for these areas. And you might see lines everywhere. You can see a line here. It's multiple touches. Very, very, very beautiful line here. Then again, you also, if you zoom in, go to the 30 minute, and now we see a whole new area of interest. If we click here and drag, you'll see that there's a beautiful trend line here. Now, what happens when I see these multiple trend lines? Well, I'm looking at the big picture. I'm looking at, okay, on the big picture, we're bullish. We have a major trend. We broke a downtrend. This is a key area. And you can see if you're a swing trader, you could have been buying this and swinging, which would have worked very well. So this setup works in multiple areas. You don't have to just be a day trader. You could be a swing trader. And that's something you need to take away from this video, that there's different ways to trade. Now, when we click on here and we go to the, let's say the 30 minute, now I do see this other trend that just kind of ran away from the trend line. And that is super important. Because remember I said at the very beginning when I was drawing, we like it when things are very, very extended. This is starting to be very extended. As you can see, price action is not the same right here as this. Do you see the difference? It's a significant difference. So that means the strategy is priming up. Now, with that being said, what happens here when I zoom in, if we go to the 15 minute, I saw an area of support right in this area. You can see that it couldn't break above this area, tested again, tried to break, failed, came back over to re-break, then held as support, and we're holding in the after hours and pre-market. That is something I'm paying attention to, because if you remember, as I said before, if we see something that has a major support near it, you definitely want to wait for it to crack, because it can hold and continue, because the big picture is still bullish and intraday we're still bullish. So I can't just anticipate the break. So what do I do sometimes? Sometimes I will buy here, and it won't be very big because I still want to be short bias, but I am going to buy a little position because it could easily do this. It could easily hold and then go back and test these levels. So that's something that I am aware of, and it does happen. So I need you to know that. So that way you don't just, oh, it's overextended, I'm going to short right here thinking it's going to break so I can get a better entry. I'm telling you, if you do that, you're going to take tons and tons of losses. I've done it enough times. Let me be the dummy and tell you not to do it. So don't do it. Let's go ahead and zoom in here, and let's go to the 5 minute. And now once we see this action and I see the support level, I'm not shorting it. Remember, I'm going to wait for the crack, or I'm going to take a baby long position because I know that it's still trending. The big picture's on my side and there's a support level. If anything, the only position I could take is a long, if any. So when we press play, I went ahead and took a long in this area because it looked like it was holding. You could see that we had a rejection multiple times and we couldn't crack. Then we had this nice hammer candle, which gave me more indication that, I definitely shouldn't be shorting right now. And so what I did was took a baby long with a stop very close under here. So with that stop, I am risking literally nothing. And I am not risking the same size that I'm going to risk when I short this position, because I am mostly short bias right now. I'm hoping you understand this. Just because you're short bias doesn't mean you take the position if the trend is against your bias. You can't go against your setup. You have to wait for it. You can't go against what the stock is telling you. Please listen to that. Once this crack happens, and this another hammer candle shows up right here, so it even gave me more confidence. Once this crack happens though, I am now all short bias. And then I'll even zoom out and give you a little bonus here. I also noticed that we had a nice little trend forming. And that's something that I am particularly noticed. If I see this downtrend line, this gives me even more confidence on where to put my stop. It's a bonus tip. So if you've been watching to here, comment below. I appreciate the bonus tip to know where to put my stop, and I appreciate you watching. Now, once I see this downtrend line and it cracks, I know exactly where I want to risk. I want to risk this area because I have confluence. I have a previous high that's acting as resistance followed by a downtrend line. That is key. So what I'm looking for is for it to crack, like I said, and then bounce, take a short, and ride it back down. That's our goal. Remember that. When it comes to shorting stocks, there are some cases where you have to borrow shares to short, and there are other cases where you do not. If you run into a case where it says hard to borrow when you try to short, that means you have to find shares to short, meaning you have to borrow them. The best broker to do this is with Cobra Trading. I love Cobra Trading. I've been using them for years, and they've recently become a sponsor as well, which I'm so thankful for. But they have the lowest commission when it comes to trading, and they have the best borrows. So you're not paying anything pretty much. They're so cheap to borrow shares, especially if you're trading small caps. This is a go-to for you. If you're interested in shorting, you have to check them out. And if you're interested in longing, they're still valuable because they're direct access broker. They're not like E-Trade or Fidelity. They're not direct access. So it takes a little bit longer to execute your trades, which means you can miss your entries in some cases. It's not going to happen all the time, but it will happen. And that's just a layman's terms of what I'm trying to say. There's a whole video I can make about the specifics on what actually happens behind the scenes. But direct access brokers, which there are many out there, but Cobra Trading is my favorite because they have the lowest commissions, the lowest borrows, and you can get direct access to the market and execute right away, which is super important when it comes to trading. So definitely check them out. If you click the link below and tell them that you heard from Be The Trader, it really helps you out, and it helps me out a little bit too. It gives you an additional 33% off when you sign up with them, and they give you a free demo account as well. So definitely check them out. This is what I'm talking about, that when it cracks and pops, you may have missed this entry up here because you could have been entering here and risking here. But if you waited and you were staying a little bit more patient, a little bit more skittish, and you waited for this downtrend line to confirm and you missed that, don't worry, you can enter in this area. Why? Because now, not only do you have a good risk reward, right now you're risking what, 86 cents? And you're going for right here is easy 2.4 to 1. And look at this prior support area. So I wanted to show you as a bonus where to take your profits. You want to take profits at a key support area. This is a key support area because there's a major reaction here. That's important. It can't be just a shitty little support area like this. We want to see a key support area that has a major reaction. So there's two ways to enter here. The stock cracks, pops. You want to get in on the pop, risking a prior resistance area, which could be there or there. Remember the example? Go rewind, go watch that when I showed you that it could crack and we have two areas. If we have two areas, you could risk here or here. It's up to you. But in this case, you might have been choosing this wider area because maybe you're not sure and you take this entry. But then once it reconfirms and cracks again and pops back up, you want to take this entry. The reason you want to take this entry is because now you have a good risk reward. You can have your stop up here right above it. And then you can say, here's my area of profit. And when you calculate that, you can see here, it says 2.4 to 1, which is what you want to see. This is something that you have to use as a disqualifier. If this stock was to crack and it pop up only to, let's just say it popped up to here, you do not want to take this trade because the risk reward becomes even less. Look at this. This is inverted. You don't want this. So if you draw your lines and it's inverted, you do not want this. So let me show you the trade I actually took on this. If you see here, I took that long, as I mentioned earlier, very small, cut it right away, and then took a short. And I was shorting into this pop. Now you'll see this green triangle means I bought some to cover, meaning I took some of the position off. The reason I did that is because I oversized. If I oversize, I don't want to hold it because then I'm going to be nervous. I'm not going to be able to hold for my plan because you have to have a plan, which I showed you earlier what your plan is. So I covered a little bit just to protect myself. And then once it pulled back and we got the confirmation, I went ahead and covered a little bit more. I like to cover into pulls because it helps me stay patient to ride the entire move. Now these covers are small. They're less than 10%. I don't want to cover too much. The max is 10%, okay? Keep that in mind because you want to ride the move. When it pops back up, this is that area right here, as you can see on the chart where I said you can enter, and that's what I did. I entered more of my position because I had a clear risk level, and then I rode it down, added it back up, rode it down. Now this adding and riding back down, that's something I'll teach you in a later video. If you're interested in learning about how to recycle so you can take more of the move and make more profits in the end, comment below saying I want to learn how to recycle. That way I'll make a video about that, especially if many people comment that. But other than that, good luck on your trading and have a great day.